All right, it's 8 o'clock, and I believe we have a good amount of persons here to begin. So let me start out by saying good night, everyone, and thank you for joining our webinar. Actually, this is our third webinar so far, and today we'll be discussing or exploring the topic, I should say, of understanding payslips. And we're thrilled to introduce our guest speaker, Dahlia Wright. So a little bit about Dahlia. So Dahlia has a bachelor's degree in economics and mathematics from Wesleyan College. She also has a master's in business administration with a concentration in finance from the Mona School of Business. She has experience in analysis, accounting, financial planning, and corporate governance. She spends her extra time volunteering, and her goal is to improve Jamaica by improving private and public sector workers. So please join me in welcoming our guest speaker, Dahlia Wright.
All right, so hi again, everyone. My name is Dahlia Wright. I'm going to be presenting Understanding Payslips for you. So we're going to go through the presentation. And then if you have any questions afterwards, then you can feel free to ask. I did this in a very bright pink because usually we get some very boring presentations, and I'm not a great presenter. So I'm hoping that the color will spark you to life and make you more interactive and pay attention. All right, so we're gonna go through the general things in the payslip, how it's supposed to look, what your gross pay is, what are allowances, income tax, NIS, education tax, NHT, and your year-end document, which is the P24 form. All right. So a basic payslip is gonna look something like this. No, it doesn't always have the same format, but you want to look out for the same things. You want to make sure that the payment date is on it, that you see your TRN and NIS numbers, that you have your name on it, the company, and company in the main lines. Now, these are things that will identify, and I don't know if you're like me, I keep every single pay slip, whether it's printed physically or it's given to me soft copy. I do keep them for at least a minimum of 10 years thereabouts. I have quite a few, so that will help you when you're going back in terms of looking at things for it. And actually it's not 10 years. I keep them for about 7 for the NHT purposes. But then I also have something that keeps general track of it throughout my lifetime. And I'll tell you why in a bit when we get to the NIS number, right? So on the payslip here, there are going to be two parts. There are going to be the parts where you have your income, and there are the parts where the tax and deductions are coming out. So you want to make sure that it is adding up. So check your basic pay, make sure that if you're a monthly worker, it adds up to what it's supposed to be on a monthly basis. And if you're an hourly worker, make sure you check in your hours to make sure that it aligns. And when you multiply the hours that you worked by the your hourly wage that is given to you by the company, that it matches up to the number that you're seeing on the pay slip. So, and that's going to be what we call our gross pay. So the gross pay is everything that you get in the total. So for your salaried worker, you're usually quoted by the year. So you'll get something like, they'll say you make 3 million a year, you make 1.2 million a year, and so whatever that is, then the gross pay for that month is going to be whatever the yearly quoted rate is divided by 12. Check, make sure it is accurate, because there are some times when it's not. And again, for the hourly wages, make sure that it is the time that you worked times the hours. For the hourly wage, you want to take a little bit more closer inspection, because sometimes what happens is that they might not log your hours correctly. And so you have to make sure that what you worked, nobody's going to protect your money like you. What you worked is what is reflecting on it, and make sure you have some documentation of the time that you work. If signing you log out of work and the hours that adds up to be, because sometimes they will dock your pay for it. Now, there are other things that come up on that income side, which is the taxable and non-taxable allowances. And so we want to make sure we know the difference, right? So taxable allowances are usually things that they give us in addition. It's not really income, it's kind of more like a benefit. So you'll get maybe they'll give you meal tickets for the entire month, or a lunch subsidy for the month. Some people give you uniform allowances, some give you taxi allowances, etc. If it is that it's not a repayment for something that you've already spent, then it is taxable. If it's something you've already spent and you are being reimbursed for that money, it's not taxable. And you want to pay attention to this in the um total calculation of what you are using for when you calculate the tax part, because some people also get that wrong, and you just want to make sure that they're doing it right, and they think they're doing it right, which is fine, as long as you know how to correct them, and you can show that it can be corrected. So anything that is taxable is something they're giving you up front as a benefit. Anything non-taxable is things that they're giving you back. All right, so let's talk about the income tax. So the income tax is divided into three thresholds. So usually when we hear it on the news in Jamaica, we're only talking about the 1.5 threshold, or no, what is the 1.7 threshold, because most people tend to be within 0 to the 6 million. So that's what we hear about mostly in the news. How can we up the threshold so that we can get more of our income without tax? No, this is very special to Jamaica's jurisdiction, because a lot of places do tax the lowest threshold. We're one of the few jurisdictions with zero tax for the lowest, right? So we have between 0 and 1.7, we pay no tax on that bucket. Anything you earn between 1.7 million and 6 million, you pay 25% tax on that bucket. And anything above 6 million, you pay 30% tax on that bucket. And one of the things too is we're a little more highly taxed than other places. So our effective tax rate is gonna be a little bit more. So this is how we're gonna calculate that money. So I have up here three different hypothetical earnings for you. One is 1.2, one is 3 million, and one is 8 million. Right now we're just calculating the income tax, nothing else. All right. So the first bracket is a person who's making and this of course is a yearly amount, a person who's making 1.2 million a year. For that, they will fall fully into the 0% bracket, because they fall under the 1.7 million dollars in the tax threshold, right? So what that means is that they pay zero income tax at all. Now, for the 3 million, the first 1.7 million, the person who makes 3 million, and I can't see you. So if you need to ask that question, you maybe have to unmute and say something, because I can't see you while I'm presenting. So the second calculation is at 3 million. So for 3 million, 1.7, the first 1.7 million dollars is not taxed, because that part would fall into that first bracket or that first threshold. So everything above 1.7 million to 3 million, which is gonna be about $1.3 million, is taxed at 25%. So which means you're gonna be paying 325, essentially $325,000 in tax for income tax per year. Right, and then the last bracket is the eight, like say someone makes 8 million, which is above that $6 million threshold. Again, in the first bracket, that first 1.7 million that you earn is not taxed. The second amount, which would be about 6 million, 1.2, it would be about 4.3 million there, 4.3 million, which is between the 1.7 and 6 million bracket. That's all of the funds that you're making in between that bracket. It will be taxed at 25%, and that's $1.7 million. Now everything over the 6 million, sorry, is gonna be taxed at 30%. So so between 6 million and 8 million, which is $2 million, is taxed at 30%, and the tax that you're gonna pay on that bracket is 600,000. Now that means for total income tax that you're paying for the 1 million, it's gonna 1.2 million, it's gonna be nothing. For 3 million, it's gonna be 324,000 for the year, or 25,000 for the year. And for if somebody's making 8 million, they're gonna be paying 1.6 million. So the effective tax rate, which means the total income tax on what they're paying, is gonna be essentially very, very different based on the amount of money that you're making. Now, notice too, the higher income you make, the more you're paying in an effective tax rate. Now, as you earn more and more, it's gonna get closer to that 30%. Because if you're making, say, 100 million a year, you're gonna get pretty close to that 30%, because only 2% of your salary is not taxed, and I think the majority of your pay will be taxed at the 30% if you're making 100 million a year. No, we're not making that yet, but I'm just making just an example to show that the higher income you get, the more and more your effective tax rate will get closer to that 30%, and the lower and lower you make, the more and more your effective tax rate will get closer to that 0%. Before we go on, any questions?
If you guys have any questions,
Yeah.
okay, go ahead.
Good night.
Okay.
My name is Adama. So my question is, I'm a nurse, right? I just started. I was working privately first, right? So I'm now paying attention, like my payslip. Thing is, I do sessions, right? And how we do it in the public sector is like every 4 hours is like overtime.
Mm.
So when you do overtime, it's for every 4 hours that you work, and you can only work a maximum of two for to make it like a complete session, right? So I'm watching it because the other day is the most I've ever seen income tax come out of my paycheck. Almost $45,000 for income tax. Why? And
And
I realized that it's because of how, I don't know if you ever seen a nurse's salary, a nurse's payslip, where all the things are quote unquote benefits that we receive,
yes.
right? And especially in my region, for the Northeast Regional Health Authority, we get heavily taxed more than any other health region across the island. We are more so heavily taxed. And
Wait, why are you more so heavily taxed?
I don't want to go into the politics of all of it, but we are heavily taxed more than any other region. We're not taxed the same. Our benefits are not taxed the same as the rest of the regions across Jamaica, especially Southeast Regional. Everybody knows that's where to go if you earn your money. It goes into your pocket and it's not taxed. So when you mention meals, meals for us is not taxed. I actually just figured that out on my payslip like 2 days ago. Meals as a benefit is not taxed, but taxi allowance
It's
is
taxed.
taxed. Right. And then every time I do overtime outside of my 40 hours for the week, which is where I make a lot of my money, is heavily taxed
Okay.
compared to Southeast Regional Health Authority, where when you make your sessions or overtime, not taxed as much. The percentage of tax is different for my region compared to others. I just wanted to tell you.
Okay. So I find that a little weird that it works differently per region. So what might happen is some places, the way they file meals, the way they file taxi, it differs based on how the company does their paperwork, right? So for some, they'll add they'll add the taxi to the taxable allowance depending on how they do their paperwork, and some it's not. Some it's an untaxable allowance. Now, what I want you to know is that so part of the basic pay is twofold. So it includes your basic pay and it includes any overtime, right? Or honorarium if the person is on salary. When they tax you, they tax you as if you earn that amount every month. For example, if you work 40 hours or within the pay or within they tax you like that for any pay period that you work. So if it's a month and you earn extra overtime, they're taxing you like that for the year. If it's a fortnightly that you work, they're gonna tax you like that for the year. And let me explain how that works. Say for January, I make $250,000 and I work no overtime for January. When they do my taxes, they tax me like make 250,000 consistently for the year. If in February I work so much overtime that I have made um almost double what I made in January. Say I made 500,000 in February based on my overtime, they're taxing me in February like I make 500,000 every month for the entire year.
All right, that adds clarity because that was the most I've ever seen.
Right. So they tax you as if in February that 500,000 you're gonna make. So we're gonna talk about that a little bit more when we get to the P24 form and what you're checking for on the P24. But every month that you make, when whatever you make in that month, they're obligated to tax you as if you made that amount every month for the year. So if in say for instance in if you make the 250 in January, in 250 you're in the tax bracket of between 1.7 and 1 and the 6 million in January. Now in that second month in the February when you made that $500,000, you're in the tax bracket of those who make 6 million and above. So they're gonna tax you in February like you make 6 million and above.
Oh, you
Understood?
reacted. Yeah, man, you reacted to the laugh that you couldn't hear. Totally.
Right. So when we get to the end, I'll show you what you'll do for that. So let's get to the other taxes. So there are three other taxes that you're gonna see on your pay slip. It's the NIS, it's NHT, and education tax. So, of course, my very pretty pictures are not showing. Okay, that's fine. So for the first one, which is the National Insurance Scheme, so they currently charge 3% up to a maximum of $5 million. So let me go back a little. So if you're making 1.2 million, they're gonna charge you 3% of the 1.2 million divided by 12 for that month, or divided by 26 if you're paid fortnightly. Same for the 3 million. If you're making 3 million a year, they're gonna charge you 3% on the 3 million divided by 12 or by 26, depending on what you're paid. If you're making 8 million, they're only going to charge you 3% of $5 million. So for the NIS, anything over 5 million, they won't tax you on that portion of your pay for the NIS. So the maximum you're gonna be paying is $12,500 a month, right? And I don't have the quick calculation for the fortnightly amount. But the maximum you're gonna be paying is $12,500 a month, right? Now the NIS contribution, you have to be careful when you're looking at your pay slip. If you have done a full week of being sick or you're on maternity leave, you do not pay NIS for that period. So if you ever have to take 5 days off, or if you're on maternity leave, your pay slip should reflect that. No NIS should come up for that period. However, be aware that because it's the national insurance system, right? It is what's gonna, the pension amount isn't much, but every make a muckle. I think it's about $4,200 a week or a month or something like that. And it gives you a lot of health benefits in terms of medicine, etc., when you're in your pensionable years. So do pay attention to that, even though it doesn't really matter, because you get full access to the benefits, whether you take whole heap of sick leave or not. Right. The second tax that you're gonna be seeing is the NHT. Now, NHT is 2%. This has no maximum threshold, so they'll charge you 2% on everything. They don't care, right? They are charging you 2% on everything. However, there are lots of benefits to NHT. You all know this. And one of the best benefits is that when you are ready to purchase a house, whether it's an NHT property or a secondary market property, you're going to be able to use a portion of your refund towards anything for the house. So if you're short anything on the deposit, if you are short anything, I think it's bank fees, or if you're short anything on like you need to pay a land survey or evaluator, you can use those funds towards that. So but if not, you can just use it to develop points for NHT property. And of course, after 7 years, you're able to apply for the full refund and get that back in your hand, right? Oh, and also make sure NHT has a login, right? So you can log in and ensure that your employer is paying over your taxes, but we're going to talk about that in the end as well. Then the last tax that you should be seeing is the education tax. So this tax, and of course, a lot of these tax have two components. One the employer pays on your behalf, and the one that comes out of your known yearly salary. So out of your known yearly salary, you are paying two. Somebody has a question?
Would it be 6,250 per fortnight? That was a question.
6,200.
And 50.
Well, it depends on how much you make. Now, yes, it depends on how much you make, because at the end of the day, it's 3% of that basic wage. Basic wage and any overtime or honorarium, any taxable income that you have made in that month, it's 3% of that. So it really depends. Now, if you max out at that 5 million, let me just calculate it really quick for you. Divided by 12 times 0.03. Actually, it's not divided by 12. It's dividing it by fortnight for you, which is divided by 26 times 0.03. It would look about 5,769. Is that what you said?
6,250.
All right, so it will not go over 5,769. Your NIS will not go over that.
Okay, thank you for the clarity.
If you're fortnightly paid, it will not go over that 5,700. If you're monthly paid, it will not go over 12,500. So it creeps up until it hits that 5 million threshold, and then it charges you no more.
Okay.
Right? All right. So the education tax, again, you pay about 2.25% of your income. Of course, this also has no maximum threshold, so they charge you the 2.25 on the entire thing. And this is going to be the only tax where there's no institution that governs this payment. This payment is directly into the consolidation fund. So, the government spends it as it feels like. If you want to, you can challenge your government. I'm just giving you the information, okay? But yes, it goes directly into the consolidated fund. But it's at 2.25%. Now we can argue that we can make a dedicated fund to education and whatnot, but that hasn't been done so far. So I guess we just pay it for paying its sake, but yeah, it's part of your taxes.
We have a
Right.
question.
So this is, go ahead.
Yeah, I have a question. So for education tax, as an independent contractor to a company, would the 2.25% be the one that applies if they want to pay taxes?
All right. So if you are an independent contractor, which means you are responsible for paying your own tax, you have to pay the employer and employee portion. You have to pay the full 6%. I think that one is actually 5.57 or something. So if you are independent person, all of these taxes you're gonna have to pay the employer and employee. So the national insurance is 6% total. The National Housing Trust is 4%. It's not here, but the employee portion is 2% as well, and the education tax is 5.75%. So unfortunately, not really nice, but yes, when you're responsible for your own taxes, you have to pay the full portion for yourself. And now there is a form that they have. I forget what the exact name of it is, but the tax authority will be able to tell you where you file as an independent contractor. In fact, what I will do is I will send that information to you maybe in the morning after we've had this discussion. I'll just ask for the number of the form.
Okay, no problem.
Okay. All right, so this is what it looks like now. So even though the person with one who's making less than 1.7 million, they can get away with the income tax. Unfortunately, they cannot get away with the education, NIS and NHT. Everybody has to pay that regardless, right? The benefit though is that it's not that much that they're paying. So effectively paying what, like 7% out of 7% is gonna be an effective tax rate, and look, that's less than that 11% tax rate for the $3 million. So it's very, very low. And I think even in the US, the lowest tax bracket for persons who make less than 23,000 a year is about 11%, and we're paying about 7 here. So for 3 million, you make a little you pay a little bit more, and for 8 million you pay a little bit more. However, we have to note that it is very small in comparison to the income tax. But as you make more and more money, the amounts get larger, and then you say stuff like, how my tax bill come up to $45,000? Like, you know what I can do with that 45?
Right.
Exactly. Right. As it goes up, your head starts to hurt you a little bit more. Like, this is a lot of money in taxes, which is why I always encourage persons to pay attention to your political landscape. That's where they determine how your monies are spent, and you work really hard. So you really need to know what they're doing with that money.
Definitely.
All right.
Mhm.
You could have used that money. So there are other considerations that we have to take, right? And the biggest one, which is I am a big proponent of, is pensions. Now, only 10% of persons in Jamaica who are working have an active and working pension. Please do not be part of that 90%. Okay? So pension, even though most times we know pensions probably won't cover everything that you need in your retirement, but every mickle make a muckle, we have to ensure that we're contributing something, right? Pension and pension and retirement planning is a different subject, and maybe we'll do that on a different day. But for now, just at least make sure if your employer does not offer pension, please ensure to look into any private pension that you can and at least contribute 5%. Now, when you contribute, whatever you contribute to pension decreases your taxable amount, right? So if you pay if you get paid $100 and you contribute 5%, which is $5 to your pension, all of that tax that we just spoke about will only be taxed on $95, not $100. So the $5 now goes into your pensionable pension scheme, etc., and that will build, earn interest and whatever. It is taxable when you take it out for retirement. So what you can hope is that by the time you're taking it out, we have better tax. We have better tax percentages for our benefit at that time, and hopefully that will happen with good fiscal responsibility, etc. But somebody's asking a question.
Yes. I think this is Joshua. Hope I'm pronouncing that correctly. I don't know how to go about the pension. I am 23.
Okay. So there are two ways, right? One is an employer offered pension scheme. All right. And usually with that they match something. They will match up to 5% or they match up to 10%, depending on the employer. Each employer has different things. So just the first thing you're gonna do is gonna ask your employer if they provide it. And I will encourage everybody to go through their employer first because of that matching portion. Now, the matching portion, they have a term, I forget it, skipping my brain right now, but there's a period in which you're working for the company where if you leave before that time, they don't have to match it. I think it's 5 years. So if you're working for them and they're matching and you're working for them for 3 years and you leave before the 3 years, you do not get that portion that they're matching. You'll only get it if you've been working for them for 5 years and longer. If they do not have a pension scheme, there are plenty of private pension schemes. Sagicor has one, Guardian Life has one, I think, and I think those are the two largest ones, but there are a couple out there. Mine is personally with Sagicor. That is not a plug to go and get Sagicor. That is a plug to go do your research on which one is best for you and make a decision accordingly. All right. So those are the two options. So yeah, either go through your employer, which is the most recommended, and or if they don't have one, then you go and get a private pension. Now, I must say that the Jamaican law does not allow you to contribute to two pensions at once. So, which happened to me, was working somewhere before. They did not offer a company pension, so I went ahead and started my own private pension. The place I'm working now, it does have pension, which is mandatory. Some places do have mandatory pensions as well. So and like a lot of government places have mandatory pensions as well. So now that I'm here and it's mandatory that I contribute to this pension, it means that my private pension I can no longer contribute to it, which means it just literally stays there in limbo until the time of my retirement. Right? Now, what I will say to you is that whatever you contribute to this pension, make sure that you're getting a pension statement at the end of every year that tells you how much you have contributed, how much is vested by the company, and what the total amount is at the end of the year. Ensure that it matches back to what you see on your payslip. So if your payslip say you contribute $1,000 every month for a year, and the total amount you contribute is 12,000 for the year, that's what's on the P24 form. Then on your pension form, it must say contributed 12,000. Somebody else is asking a question.
I'm not seeing it in the chat. Um, Let me just double check.
Okay, that's
No,
fine.
I'm not seeing it in the chat.
Okay. So the other considerations are things that are coming out of your your payslip, which includes your insurance. A lot of companies have health insurance that comes out. Make sure it's the correct amount that's coming out every a month, or sometimes they forget to take it out and then you'll have to double up on a month later. Or sometimes it's sometimes they forget a couple of months and they want to take it all out at once. So make sure it's coming out every month. And if it's not, please point it out to your HR or payroll, because you don't want them to discover it on the back end and charge you all of it at once, or you don't want to lose the benefit of the insurance, especially at inopportune times. Then the other deductions that can come out are any loans that you have maybe gotten through some work thing with some special vehicle that you got through work. I know that for a couple of companies there are world nets and salary deductions can come out. And also for that too, make sure when the salary deduction comes out, it is applied to the actual account that it is supposed to go to. Because there are times when it comes out and you'll be looking for months and nothing is coming up on your on the actual account that it's supposed to go through. So make sure you follow up on that. All right. So at the end of the year, you are supposed to get a P24 certificate from your employer, right? So this amount is going to have the aggregate amount of money that you got paid for the year in basic pay, how much you got paid in overtime or honorarium, how much came out in pension, how much came out in taxes, how much. It's supposed to have everything on that form. Now, the reason why I had, if you recall, we had, let me go back. Yes, we had, I used the yearly figures here and not the monthly. It's because of situations like when the lovely young girl earlier, we had an example where in month one you're making 250 and in month two you're making 500,000. So the taxes, they tax you like that for every year. When the P24 certificate comes out, you're gonna get the full amount you paid, which means you might have overpaid on some of the taxes, or you might have underpaid on some of the taxes and you don't want nobody know. But what I would do, I would calculate how much you paid and make sure that the tax rates are accurate. Make sure your income tax rates are accurate. Make sure the minor tax rates such as the NIS, NHT, etc. Make sure they're accurate, especially the income tax, because the income tax is gonna be the largest portion, right? Depending on how much you're making. Make sure that it is, when you calculate it and you go through with the full year money and you take out the 1.7 and you take out the amount between 1.7 and 6, which is 4.3, and you do that tax and you find what your effective tax rate is, that it matches back to the what you see on your P24 form. If not, you can always go to tax administration and file for a refund. You can do that on their online platform. to file for a refund if it is. Now if you get a monthly, if your monthly pay is usually the same every month, which most of us are, more than likely you're not gonna need to file any tax refund. But if it fluctuates from month to month, it is possible that you might need to be getting a refund. So you can go to the tax administration, you file documents, and they will process the refund. I think it takes maybe like 6 weeks or something like that. Additionally, and I mentioned before, you have the NHT online platform as well. Please go through and check that you are check that what is paid and etc. And this is more so for smaller companies, because some we tend to have, I don't want to say we tend to have, but we do in Jamaica have some issues with small companies. Sometimes, not most times, sometimes they do not pay over taxes on the behalf of their employees. So you see it come out of your pay and you see it on the pay slip, but it's not being paid over. So make sure to check that in the US, what they do is that everybody has to file a tax return, and you get a W-2, which is their version of the P24 certificate. You get the W-2, and everybody has to file. So you must know if the company paid over the taxes on your behalf. In Jamaica, we don't have a system where everybody files a tax return, because even in the US, even if you don't owe any tax, you still have to file it. Right? In Jamaica, we don't have a system such as that. I think our system is too, it wouldn't be able to handle that volume, to be honest. But but I still advocate for you to check to just to make sure that everything is accurate, that you haven't overpaid on your taxes, especially persons who work a lot of overtime. You would want to check if you're not overpaying. And then check for the NHT just for persons who work for small businesses, just to make sure that your taxes are being paid over. All right, and that's it. Thank you. And we'll take any other questions at this time.
Okay. Remember, if you have any questions, you can drop it in the chat, or if you want to unmute your mic, you can go ahead right now.
So I do advocate for budgeting. So I'm not sure if anybody budgets, but I do. And so in my budgeting process, I just keep account of everything. So even if I have to throw away a pay slip, I have maybe like a documentation of all of the pays that I've gotten and all of the taxes. Is there a source where we can check the percentage if the percentage changes in the tax? Oh, okay. Usually if there's a percentage change in tax, it is done in the budget debates that occur in March. So when the Minister of Finance speaks, he will announce any changes in taxes at that time. Any changes in taxes, any changes in minimum wages, all of that is done in the budget speech. And it's also on the tax administration and MOF. It's on both of them.
Keep the
So just like if you know, when I think the 1.5 tax threshold was announced for 2016, and then the 1.7 tax threshold was announced last year. Was it? No, it was this year. April, the 1.7 tax threshold was announced in Parliament, and it was stated what the effective date would be and etc. So it will be out there. Ministry of Finance and Tax Authority, Jamaica.
All right. Any more questions? Because I know Dahlia is just waiting to answer all of them. So
What did he say? What's correct?
I'm guessing the taxes are based on the economy on a whole.
Yes and no. So when they collect the tax, it all goes into one pool, right? So they have to figure out a way how to cover all the bills and expenses. but also not pressure us too much with taxes. So when the economy is doing well, they collect more tax, they're able to lower the tax rate. So like how they lowered the GCT tax rate from 17.5% or 16.5% to 15%. So they're when the economy is doing well, they're able to lower the rate because they're still collecting a huge amount of taxes. If it's not doing so well, it becomes an issue because they have to figure out how to cover the large expense without putting too much of a burden on us, the taxpayers.
Okay. Okay, we have another question. Can the deck slash
Mm-hmm.
resignation be sent to us? It's very informative.
Sure, definitely. I can definitely do it. If we are overpaying, what's the first step? So the tax refund process is actually entirely done online. So I don't know if you just like how I said you can apply for an account at NHT. You can also apply for an account at TAJ, which is exciting. So it is actually done on that platform. The refund is actually done on that platform. You can also like do things like pay your motor vehicle. Uh, I think it's the fitness fee you can and the registration fee. If I'm not mistaken, you can pay on that online. But the process is done there. They're gonna ask you for I think they have a form for the P24, which but you can just ask your employer to fill out the form because they're supposed to give it to you anyway at the end of the year, and then you use that for you're gonna have to scan it. I haven't gone through the process because I've always been yeah, you pay for your police records. So I've always been a kind of a 9 to 5 worker. I've never been in anything that you can make overtime, but we've had other people who work maybe say on they work on commission, and persons who work in dentist offices tend to tend to not have the dentist office pay their tax on their behalf, so they have to do it themselves, and then the refund comes. So it's all done on that platform. And I think when I send, somebody just asked for a copy of the presentation. So what I'll do is I'll add the exact place you can file for the refund on the presentation
Mm-hmm.
when I'm sending it over. There was something somebody else had asked for, and I want to make sure that
Yes.
I put it in.
Well, I'm not sure if you're talking about the question that came in before Weston's question. I believe she asked if you do not have pay slips. Hold on. Hold on. Can you apply for a tax refund if you don't have all pay slips?
As long as you have your P24, as long as you have your P24, you can file because it's the P24 that you're gonna need. You want all your pay slips so that you can make sure that the P24 that they give you is accurate. What I say, let me tell you, don't trust nobody. Do not trust a single person. Check everything for yourself.
Correct.
Check everything for yourself. And if the numbers come up wrong, you should be in HR or payroll asking for an explanation about why the numbers are wrong. So yes, what I do keep my payroll. Luckily, this place that I'm working for now, they give digital um digital pay slips. So I can just literally save it on my computer, and I have a backup just in case anything happens to that computer. So I'll have access to my pay slips in perpetuity, right? But if I will do whatever I can to keep my pay slips. If you're missing one, go and ask them for the one that you're missing. you can always go to them and ask them for a copy of any payslip that what once you've been working there. So if the payslip was from 2 years ago, you go in and you tell them, say, you want a payslip from 2 years ago, January. But they should be able to print that for you.
Okay. We have, I believe,
Yeah.
another question. How long after paying income tax can you apply for a tax refund?
So tax refunds occur every March. Just like how businesses have that March deadline, you have that March deadline, and the period that you're doing refunds for is January to December of the previous year. So when the year closes off, you have from January to March to file. Now, what I would suggest you do, as soon as you get that P24, you're supposed to get it every January. As soon as you get that P24, just sort it out, because if you wait until March when businesses are also doing their taxes, you are gonna meet up on a very heavy line. Don't wait till March. Do it in January. And when you get the P24, you're also supposed to get the pension statement around the similar time as well. And that's if you have the employer pension, but you're supposed to get year-end pension statement from your pension fund too, if you're doing a individual one.
Okay. And I believe accounts department is linked to your question, Amoy. That was the question that you just answered about how long you can apply after after paying income
Mhm.
tax, can you apply for a tax
Yeah,
refund? Okay.
yeah,
All right. We have
right. If you don't get
no,
your
sorry.
P24 form, make sure to go to your HR department or your accounts department, whichever one is responsible for payroll. They should be the one you go to be asking for that P24 form. So if you don't get it in January, February 1st, you should be knocking at their door. Where's my form? Where's my certificate? I need that. Okay. What percentage do we get back as a tax refund? It's not a percentage. It is, I'm gonna use somebody who's making 2.7 million as a, or say somebody makes $3 million. It's literally just how much you've overpaid once you've calculated it. So remember, I would have said to you that, okay, if in January you work no overtime, they are gonna tax you as if you make 250,000 that month. They are gonna charge you as if you make 250,000 every month for the rest of the year. So they're gonna tax you that way. So say, and this is hypothetical, I'm not taxing anything, right? Say that tax comes up to $50,000. So you've paid $50,000 in taxes in January. Now in February, you've made 500,000, and they're gonna tax you like they're gonna tax you like you make 500,000 every month for the year. So at 500,000, you have hit that $6 million mark. So anything over 500,000, let's use 550 actually. So anything over that 500,000, so that extra 50,000 is gonna be taxed at 30%, right? And but you don't make that, but you make that every month for the rest of the year. So you, technically in that month you have overpaid on taxes, but for the year you haven't yet. So when you have taken into account every year, maybe you do that, maybe a back and forth between 250 and 550 every month for the rest of the year. When you add up that total, you have not made more than the $6 million. So on those months that they've taxed a portion of it for 30%, they're gonna need to give you that back. Now, what that percentage is gonna look like is not a set percentage. It's gonna vary depending on your circumstances, which is why you have to make the calculation to say what on the year end money, When you calculate the 1.7, the next 4.3 million and everything over that, what is your effective tax rate, and if that's similar to what's on the P24 form. Now, if what you calculated is more than what's on the P24 form, then that means you owe them money. If you don't really want to file at that point, but technically you're supposed to give them the extra money. If what you calculated is less than what's on the P24 form, that is the period when you would file for a refund, because they would owe you that extra money because you've overpaid.
Okay.
I hope I explained that well, because I know sometimes it can be. It took me out, like when I just started this, man, it took me some time to understand. So I hope I have explained as clearly as possible.
All
And
right.
if not, just tell me. I don't mind trying to figure out a different way to explain it to you.
No problem. I finally found Weston's comment. He said, next time I think we can all agree that you would be great for a future webinar focusing more on business owner taxes and what to expect based on profit margins or
Mhm.
performance.
All right, so business tax is a little different, right? So that's when you're gonna need a real CPA, right? Because it depends on the ownership type, and it depends on how you take your money, right? So usually, if you're a sole partnership, the tax is different than if you own like a limited corporation and you take a wage from the company, or you may take drawings from the company, and it's just different tax versions in every single case. So that one is a little bit more difficult, and you probably would need a CPA to tell you something a little bit more specific to yourself and how you structure the company and how you interact with the company, etc. Right? Because I have one company that I work with, and they mainly deal with drawings. They don't actually take a wage. They mainly deal with drawings, and I am tired to tell them that they have to pay income tax on those drawings. Right? But they would be responsible for that. They can hire somebody separate for the to pay the income tax on the drawings and such, etc., because that's where it comes to your personal income. The best recommendation is that you take a salary. You take a salary from your company and you pay the income tax just like how we would pay the income tax, and then it's just easier that way. For sole partnerships, that's a little bit different. You're gonna have to do the drawings. Or sorry, so sole proprietorships, you're gonna have to do the drawing.
Okay. I think we have one last question, and it's from Elena. So she says, if a person works under minimum wage, or earns, sorry, if a person earns under minimum wage, do they still pay the full tax?
Nobody should be earning under minimum wage. That's illegal. If anybody is paying you under minimum wage, I don't know. You need to do some kind of secret report in there, but nobody legally should be paid under minimum wage. That's against the law. Now, if you are paid at minimum wage, you I think that works. That's what, 13,000 a week, I believe. No, or is it up to 14,000 already? I know that they announced some kind of increase. But yeah, so if you're paid at minimum wage, your total year amount is gonna be less than 1.7 million. So you won't pay any income tax at all, but you will pay the NIS, the NHT, and the education tax. You must pay that.
Okay.
Oh no, I remember. I think it's like 14,000, and then after the NIS, NHT work out to like 13,000 per week.
Okay, we have this has to be the last question, guys, based on time, and then we have the raffle. So if you have any more questions after this, I'm gonna ask Dayla if she could leave her contact in the chat. so that you guys can reach out to her. So the last question I have here is from Fayoni. I recently went to the I recently went to the tax office to pay my overdue payments on my business, and I was told that the system has me as being overtaxed on my special allowance from my full-time job. They did not allow me to file as they need to clarify it. What would have caused that?
So you are filing on your business for the sole proprietorship.
You can unmute Fayoni, if possible.
Yeah, you can unmute.
Correct.
Okay, so your sole proprietorship, if you're okay, how taxes work is that they work off of your TRN. So that's, if you think about what happens in the US, it's like a social security number. That's what a TRN is. It's your identifying number. You pay tax every time you pay taxes. The identifying number that identifies who you are is the TRN. So when your company pays taxes for you, it is under that TRN. Now, the why sole proprietorship is more if it's a business. There's a kind of cap on what you can earn, and it's probably just you alone in the business. So the business pays tax on your TRN. Now, remember I said to you, if you earn different amounts every month or every pay period, you might be overpaying. This is the situation. So is that the situation that you're under, that your 9 to 5 is something that fluctuates monthly? You maybe earn overtime or you maybe work commission.
My full time is standard, but there are occasions when we are reclassified and the rate changes. But for the financial year that ended, um, when they checked the record, they saw where at my special allowances, it, they were taxed twice.
Ah, okay. So what that means, you're gonna have to file. Well, you can file for a refund, but what I would say is that I would just apply that to any future tax things, so you won't have to pay them as much.
So can I use it to pay for the one on the business?
Um, because you're a sole proprietor is kind of the same TRN. But you're gonna have to ask them that, because sometimes they'll allow it and sometimes they won't. It depends on the situation. So have you
Okay.
spoken to them as yet?
Yes, because
Yeah,
they really wanted to clarify or
I think
anything like
you.
that
Mm-hmm.
because they want to know why it was taxed twice.
Yeah,
So
they're gonna
I
wanna
have to
know
go back
because
to them.
they don't want it to happen again.
Right.
And sometimes too, when there's a mistake, there are usually other mistakes that you have missed. When there's one mistake, which is why I tell you at the beginning that you want to check everything. Don't trust nobody. If there's one mistake, there's probably it might not even be with you, but maybe other persons in your company, etc. But if there's one mistake, I can guarantee you there are other mistakes. So you might be overpaying on different things, so they're gonna wanna know that.
Well, I agree with you on that because I got a letter that in 2018 um, I was overly paid, and hence they sent me a letter saying I owe them 100,000 in taxes
See?
because my employer did some miscalculation, and hence I have to pay.
Which is why I said to you earlier that every paycheck you're going to want to check. If them tell you say if you don't see the health come out of it 1 month, you need to go to them next day and say, hey, the health has not come up, the health card money has not come out of my thing this month. If the tax look a little high, you need to make, but you have to make sure you check it every month and you let them know when you see an error. The next thing I want to say is that when there is an error, make sure to email them everything. Email and document everything. Every discussion, if you have a conversation with them, send them an email afterwards. And usually you're sending it from your work email address. I would just CC my personal address so I'd have access to that email should I ever leave the company. But you want to email them everything to say, hey, I have gone through my payslip this month and I have identified the following errors, XYZ. How can we address these things? Because what you don't want, and whenever they make a mistake, I will let you know they are not gonna take ownership for it. It's gonna be on you to fix it. Even if it's on you to follow up behind them like Jesus did to Peter, right? You're gonna be the person who is responsible for the follow up and getting it corrected.
I agree with you because even the bursar refused to give me the P24 for me to go and verify it. Up until now, she hasn't. So I agree with you.
All right, and that's the next thing, guys. Legally, you must get that P24 in the first month of the year. It is legally due to you. It is your document. They must give you a P24. If you have left one company and went to another, midway through the year, you must get two P24s, one from the company that you have left and one from your current working company. You must, if they give you a retroactive, say you left there last year and they gave you a payment this year for something that they miscalculated and realized and sent it back to you, they need to give you a P24 for this year for what they paid you as well. They must, it is not an option. They must give you a P24 at the end of the year. It is due in January. Gotcha? So make sure you follow up.
All right, I know I said we had one last question, but we
Thank
have
you.
one last question. This is the last question, guys.
All right,
And
no
then we'll
problem.
ask
Yes.
to drop her contact at the end. So Cassandra wants to know what about taxes in relation to a remote contractor to a US company?
All right. So when you are a remote contractor to a US company, it means that you are responsible for filing your own taxes. And so they will give you a W-2 over there. Um that's a good question actually. So usually if you're a remote contractor, it depends on the jurisdiction. Do they give you a W-2 or they give you a P24 because you've worked in Jamaica? They give you a W-2. So you're responsible for filing it in the US.
Mm-hmm.
You're responsible for filing it in the US. You're a resident in Jamaica. So there are some jurisdictions where you have to file in two places. So that one I'm gonna have to look up for you, Cassandra, because I don't get a lot of persons who work in the US here. I'm gonna look that up for you because there are some times when you have to file in two jurisdiction and it gets a very complicated because what you file in Jamaica is going to be the difference between what you file in the US. So the US's tax rate is less than Jamaica. I think their highest tax bracket is 24%, and we start at, it goes from 0 to 25. So If you are in, say, the 12% bracket or the say there's a 15% bracket, if you pay 15%, then you have to pay the extra 10 in Jamaica. So it gets a little complicated, but that's if you're a US citizen. I don't know how it works in the reverse. So that is something that maybe like you're gonna have to ask a tax accountant to help you. If you if it is that the amount that you get paid is not substantial, then I wouldn't bother go through the process because you're gonna have to pay a tax accountant to do that for you. If it is your full-time pay, I would pay a tax accountant to give you advice on how to file that first year, and then just file it yourself on the and just learn how to do it and file it yourself on the other years. Because if anything should happen, um you're gonna need that documentation. You're gonna need that tax documentation. Additionally, things like NHT, if you're not filing those, and the NIS, you're not gonna get those benefits. And if you're lodging the money in a bank in Jamaica, some banks, not all, but some banks will report you. They will report you that you are having consistent US income, and one, they're not sure if you're filing taxes, and two, they want to verify where that money is coming from. Right?
All right, she answered her question. All right, guys.
So not all banks, but I really take a chance. But if the amount is not really large or noticeable, you probably can get. This is not my official advice, but you probably can get away with it. But if it's your monthly income and it's substantial, yeah, you're gonna wanna get a tax accountant in, pay that first time, and let them do the taxes and show you how to do it, and then you will file by yourself. You will do so monthly. So every month you will have to file your taxes.
All right. Thank you so much, guys, for your questions. And as I said, if you have any more, Dahlia has dropped her email address and her contact number, so you can go ahead and make a note of that. Can they reach you on WhatsApp with this number?
Yeah. Yes, they can.
Okay, awesome. All right, Dahlia, I just want to thank you so much for taking the time out to, meet with us and give us such an informative session. I know there are more questions, and I know when persons review the presentation, they will have more questions. So this was very insightful and very informative, and I just want to say thanks again for, just taking the time and explaining.
Oh,
Um,
you're welcome.
thank you. Before we leave, we have a raffle.
And then
Sorry, I didn't hear that.
I said thank you for having me.
Oh, no problem, no problem. I believe someone had their hand raised. Maybe I'm not sure if I saw that. But before we leave, there is a raffle that we are doing, and the lucky recipient will get a $50 Amazon gift card. So I'm just going to share my screen. So I went ahead and documented all the persons who are at the webinar. So I'm just gonna go ahead now and spin the wheel. And the winner is Cassandra Smith. Cassandra, are you on the call still? Does anyone know? Okay, awesome. So Cassandra, your Amazon gift card will be emailed to you. Yeah, your Amazon gift card will be emailed to you tomorrow. So thank you everyone for participating. Thank you for taking the time out. I know it's in the week and some of us have work in the morning, but I just want to say thanks again for coming out. And as promised, the presentation will be emailed to you tomorrow. And also the webinar will be posted on our YouTube channel. So thanks again, and everyone have a wonderful rest of the evening. Bye bye.